Hi, I'm Greg Smith with IPX 1031. Today's 1031 exchange tax tip is that taxes are brutal. And while there are hundreds of non-tax reasons to exchange, such as maybe you own non-income producing land and you'll exchange that for income producing property, or maybe you own 5 single-family rental properties around town and you want to exchange that into one apartment complex. But in the end, everyone who's doing a 1031 exchange thinks about deferring the taxes. So we should start with examining what are the taxes. And what I've learned through the years is that taxes are much worse than most exchangers think. They often come in, they've heard, hey, the long-term capital gain tax is 15%. That's not so bad. Maybe I'll just pay that and move on, stick my money in the stock market. Taxes are always much worse than that. So the 15% rate jumps to 20% when you meet certain income thresholds. There's also a lower income threshold where the tax rate adds on a 3.8% tax that comes out of the Affordable Care Act. So many exchanges end up at 23.8% as the jumping off point rather than 15%. But even if you're at the 15% rate, you've got to factor in depreciation recapture. So depreciation is this idea that the buildings we're in are crumbling away over time. So you take the value of those buildings, you divide it by 39 years for commercial property and 27 and a half years for residential property. And that's a wonderful tax break you get as a real estate investor that helps to offset some of that income coming in each year. But when your property's gone up in value or not gone down in value as quickly as they thought under that schedule, and you go to sell it, Uncle Sam is going to stick his hand out and he's going to say, hey, pay us back for that. We've been giving you credits you didn't deserve. So they're going to total up all the credits you received through the years and they're going to tax that at 25%. That can be the worst tax of all in a lot of 1031 exchanges or sales that should be 1031 exchanges. Finally, people forget about state tax. In the Midwest, it's usually around 5%. Some places it's much, much higher, especially on the coasts. Out in California, they're going to get you at 13.3%. Absolutely brutal. So when people come in and they say, 15% is not so bad, more often it's about 30%. Sometimes it can even be over 50% when all is said and done. So today's tip is that taxes are brutal. If you want more specific information or have any questions about this, please contact me.